All right, let's check where global markets finished overnight. Again lower as investors continue to grapple with concerns over higher interest rates and expanding sanctions against Russia. Shares on Wall Street ending well in the red after the Fed's March meeting minutes showed many Fed officials would have favoured a 50 basis point hike at last month's meeting, but deferring to a 25-point move higher in light of Russia's invasion of Ukraine and the uncertainty that that brings. So let's take a look at where we're likely to go today, what we should be watching. To do that, we're joined by Pete McGuire from XM. Pete, good morning to you. Great to catch up again. All right, so the focus overnight has certainly been on those Fed meeting minutes from last month. What did you make of them? Do you think they were a little more hawkish, that commentary that we've seen there, than expected?
Well, good morning, Andrew. Yes, they certainly were hawkish, and that I think the impact of those were felt across equity markets, certainly the energy sector. Dollar strengthened, and it took everyone by a little bit of a deep breath to say, okay, this is where we're going, and the realization of how this month's going to play out, and certainly leading in for this quarter. So, yeah, big move to the downside for the Nasdaq. I saw it was off nearly 2.25%. Energy prices hammered to the downside, and yeah, what a great night to trade.
Yeah, absolutely. So when we take a look at currencies, certainly the dollar benefiting. What are you seeing? Where's that tracking at the moment then?
Well, we got a 99.62 handle for US dollar index, Andrew. So that very, very close. I'm pretty sure it'll break 100. I wouldn't be surprised this week. So we've got a couple of trading sessions left. So that move to the upside as far as US dollar. We've got softness, as we know, pound, yen, euro. Aussie is really whipsawing, and that's creating, we're down the best part of nearly 1.5 cents since the other day. So that's really demonstrating, I think that was Tuesday afternoon. So really wild moves, and it's a time for traders to, I think, enjoy this volatility, because it doesn't last. And when it's on, it's game on and it's showtime.
What are you seeing with the Aussie at the moment? Of course, we did see that peak on Tuesday with the Reserve Bank meeting. It has come back significantly, still sitting around 75.
Yeah, exactly. I still believe it's a 73 to 77 handle, Andrew, as far as whipsawing. I know some analysts are saying you're going to see an 83, 84 handle by the end of the year. I think that's very bullish, but look, I'm not here to forecast too far out. It's hard to forecast 48 hours, let alone 9 months. So that where we're running at the moment, I think it'll just be whipsawing. Great, big moves. You're going to see 1 cent moves are going to be pretty much across that whole currency complex on some trading days during your business week. So it's really demonstrates 24 hours a day, it's 5-day-a-week business, and when the big boys get into it, hedge funds, central banks, and so on, it shows the depth of the market. $6 trillion a day is traded in it, and volatility is the only name in town.
Yeah, Pete, so when we talk about the Aussie, of course, commodities very much the focus there. It's interesting to see what's going on. How would you describe trading in commodities at the moment? Is it in a range?
I think base metals, Andrew, are fairly, there's nothing really wild there. There are no great moves. I mean, if you look at aluminium, lead, nickel, zinc, copper, there, and some of the precious, there's not big trading ranges. But when you look at energy and energy-specific gas and, of course, crude oil, yesterday we were at 106 for Brent, 107. We were thinking, right, that's really going to, possibly be a 110 handle. And then it just capitulated. Now we're at 101. We're at under 100 for WTI at $97.50. So they've all given up $4 and $5 and $6 moves over that 18-hour period. So it just demonstrates the huge softness across, or again, volatility across the energy complex.
But of course, two big factors at play here, particularly as far as energy is concerned. Clearly, what is going on with Ukraine and the sanctions imposed on Russia, and how the Euro bloc is dealing with that, pretty much now trying to wean itself off oil, gas, and now coal. But Pete, also we need to factor in what's going on with China at the moment, because those lockdowns have been extended as far as the COVID outbreak there is concerned, and what impact that's likely to have on demand.
Well, demand destruction, exactly, Andrew, as far as China. But, it's very hard to forecast as far as, coal consumption for electricity in China. You're looking at, of course, energy and crude oil, gas. So, look, let's say it softens a little bit. I'm not suggesting it's going to be a meltdown and you're going to see, big pullbacks, but it could be, something to certainly keep an eye on over the next week or two leading up to our Easter, and how China navigates through this current lockdown situation. The German situation is one of much intrigue. As far as that Russian coal and what they're prepared to do, it might be a bit hard to charge a Tesla in Munich, Andrew.
Yeah, absolutely. Pete, what are you seeing in gold at the moment? Of course, traditional safe haven, but seems to be stuck at the moment. There were forecasts it could push beyond 2000, but at the moment struggling to get above 1950.
Well, exactly. It seems to be, again, range bound, that 1920 to 1950, 1960 handle. US dollar index, again, nearly 100. So the fun and the enjoyment, I think, is going to the dollar at the moment due to Brainard's comments and the Fed. So I'm not expecting any surprises with gold this week, but possibly leading up to Easter, you might see, a little bit more action to it. So you've just got to identify which markets are moving. Gold at the moment is on a holiday, so leave it alone until we see a breakout either way. And there's easier money to be made in the short term as far as currencies and certainly energy complex, and possibly shorting a little bit more as far as the Nasdaq.